Hello, viewers, and welcome to the Macro Roundup for this week. In the United States, bond options traders are increasingly betting that the Federal Reserve will forego any rate cuts this year, given the war, existing inflation, and how rising oil prices may make matters worse. Investors divested a net $21.92 billion of U.S. equity funds during the week in their largest weekly net sales since January 7th, amid concerns over the U.S.-Israel-Iran conflict and its potential impact on inflation and the interest rate outlook. Goldman Sachs predicted that if the situation in the Middle East de-escalates rapidly, the Federal Reserve has room to cut interest rates twice this year. Investors should view the pullback in U.S. stocks as a buying opportunity. The Federal Reserve's vice chairman for banking supervision called for a review of the impact of liquidity rules on banks during periods of market volatility and for addressing weaknesses in the framework. Goldman Sachs has warned that the S&P 500 is on a painful path in the short term, as even positive macro indicators are dwarfed by geopolitical risks. Unemployment rose back to 4.4% after grim February numbers, and downward revisions painted a less than pleasant picture of America's labor market. Non-farm payrolls fell 92,000 last month, one of the largest declines since the pandemic, after a strong start to the year. Retail sales declined in January, restrained by weakness at auto dealers, and as a lengthy winter storm across the central and eastern U.S. likely impeded shoppers. The Trump administration is continuing to push back on court orders tied to a Supreme Court ruling tossing out most of its tariffs. With U.S. businesses looking for a $170 billion refund, a lower court judge tasked with implementing the high court ruling has jumped into the fray. Trump's loss of $1.7 trillion in tariff revenue will send the national debt to $58 trillion by 2036, according to a U.S. think tank. Goldman finds no meaningful relationship between AI and productivity at the economy-wide level, but a 30% boost for two specific use cases. The typical U.S. homeowner has stayed in their home for 12 years, almost double the median tenure from 2 decades ago, according to Redfin. U.S. companies denied refunds on Trump's illegal tariffs. FT reports as Trump's tariff refunds may total up to $182 billion, estimates find. The ball to make Kevin Warsh the new chair of the U.S. Federal Reserve is officially rolling, after President Trump on Wednesday submitted his nomination of the former Fed governor to the Senate. The U.S. plans to complete several trade investigations that will allow Trump to impose new tariffs within 5 months to replace the levies struck down by the Supreme Court, U.S. Trade Representative Jameson Greer said. The Institute for Supply Management said on Wednesday its non-manufacturing purchasing managers index increased to 56.1 last month, the highest reading since July 2022, from 53.8 in January. Economists polled by Reuters had forecast the services PMI easing to 53.5. Manufacturing in the U.S. expanded in February, but input prices soared at the fastest pace since 2022, stoking fears of an inflation resurgence even before this weekend's attacks on Iran. With rising oil prices fueling inflation, investors are piling into U.S. bond market products that protect against such price moves, pushing some valuations to the highest levels in nearly a year. China's government has told the country's top oil refiners to suspend exports of diesel and gasoline as the escalating conflict in the Persian Gulf disrupts the arrival of crude from one of the world's largest producing regions. China's draft 15th five-year plan, released on Thursday, outlines a series of measures to enhance manufacturing capabilities, including strengthening competitive advantages in rare earths, rare metals, and super-hard materials, and targeting emerging technology fields such as advanced chips, robotics, batteries, and brain-computer interfaces. China's large state-owned manufacturers struggled to turn a profit in February, hampered by weak domestic demand, while private sector firms reported a marked recovery in exports, official and private activity surveys showed on Wednesday. The official Purchasing Managers Index, PMI, fell to 49.0 in February from 49.3 in January, a 4-month low, the National Bureau of Statistics poll showed. It remained below the 50 mark, separating growth from contraction, and missed a median forecast of 49.1 in a Reuters poll. China set its most modest growth target since 1991, a tacit acknowledgement that the model powering the country's economic rise is showing strains. The goal, which is a range of 4.5% to 5%, is the first formal downgrade since 2023. Widely anticipated by economists, it signals Beijing's tolerance of a slower pace of expansion while it searches for new sustainable sources of growth. U.S. and Chinese trade negotiators are slated to meet in mid-March, according to people familiar with the matter, signaling a planned summit between Trump and Xi Jinping is pushing ahead despite American strikes against Iran. The Trump administration is reportedly considering limiting the number of H200 chips NVIDIA exports to any single Chinese company, with a potential purchase cap of 75,000 chips per buyer. Several Chinese financial firms are scaling back exposure to Middle Eastern debt, while regulators are stepping up oversight as the conflict raises concerns over the nation's extensive lending in the region. One major bank took a rare step in restricting a drawdown on a bilateral loan to one of the Abu Dhabi government's financial entities, a person familiar with the matter said. The European Central Bank vice president stated that the protracted war with Iran could alter inflation expectations, but the Bank of France governor said there is currently no reason to raise interest rates to address rising oil prices. Europe's already huge task of refilling gas storage for next winter has suddenly become far riskier and far more expensive, as fallout from the US-Israel war on Iran disrupts LNG production and shipments. The euro area economy expanded less than initially reported at the end of last year, with trade weighing on growth. Whether the 21-nation bloc can keep growing now hinges on events in Iran, where US and Israeli attacks have already sent energy prices soaring. The fear is that inflation picks up and economic activity is curbed. Much will depend on how long the fighting lasts. The Bank of Russia is suing the European Union for putting an indefinite freeze on assets blocked over President Vladimir Putin's invasion of Ukraine, arguing that it's being deprived of legal protections in a first challenge of its kind. Since the war erupted, German Chancellor Friedrich Merz told Trump that he wants the EU's trade agreement with the US to be implemented quickly and that the bloc can't accept a deal with worse conditions. Bank lending to Eurozone business slowed last month, while credit to households stayed firm, ECB data showed. The growth rate of loans to companies decreased to 2.8% in January, its slowest pace since June 2025, from 3.0% in December. The US is reportedly set to maintain its 10% general tariff on the EU, rather than raising it to 15%. However, due to the uncertainty surrounding the tariff outlook, the European Parliament continues to freeze the ratification process for the US-EU trade agreement. Unemployment in the euro area unexpectedly dropped to a record low as economic expansion outpaces forecasts. The jobless rate in the 21-member bloc fell to 6.1% in January from 6.2% December, Eurostat said today. Europe's decades-old economic model, which has relied heavily on an expanding workforce, is coming to an end, the chairman of Eurozone finance ministers said on Wednesday, pointing to the need to mobilize savings to finance investment and innovation. Kyriakos Pierrakakis told a conference organized by the European Investment Bank that Europe's economy was facing strong demographic headwinds, and by 2040, its workforce, currently around 200 million people, could be shrinking by close to 2 million people per year. The EU will ask international partners for additional funding for Ukraine to help close a gap. The war-battered nation risks running out of money in the 5th year of Russia's full-scale invasion. Canada's economy shrank by an annualized 0.6% in the fourth quarter, driven by a sharp decline in business inventories, but partially offset by increased household spending and exports. The economy grew just 1.7% for the full year, the slowest annual pace since 2020, as U.S. tariffs weighed on Canadian exports. A senior Bank of Canada official warned policy restraint may be needed if a supply shock has a large and persistent impact on inflation, even in a scenario where the economy is weak. In a speech this week, Bank of Canada Governor Tiff Macklem discussed risks tied to private credit, noting that while it fills real gaps, the sector hasn't been tested through a full economic downturn, leaving uncertainty about how it would behave under stress. Canadians are now buying from and selling to the U.S. less often. Exports to the U.S. plummeted 5.8% last year, driven by lower volumes of vehicles, steel, aluminum, and forestry products. The hit to exports dragged growth down, with real gross domestic product expanding by just 1.7% last year, the lowest rate since the economy shrank in 2020. We expect employment to increase by 10,000 in February, while the unemployment rate edges higher to 6.7% from 6.5% in January, reflecting a partial retracement in the labor force participation rate after an unusually large January decline, according to RBC Economics. Toronto home prices fell for a ninth consecutive month in February, dropping 1% to $932,000, according to data from the Toronto Regional Real Estate Board. Both buyers and sellers are hesitant to enter the market, with sales declining 4.9% and new listings dropping 11.5% on a seasonally adjusted basis. The Bank of England is planning to wargame the potential economic and financial impact of a full-blown AI shock amid fears that the technology will cost vast numbers of jobs and cut through a swathe of businesses. The UK Central Bank will also consider whether to incorporate the assessments into its broader banking stress tests to capture a possible surge in household and company loan defaults and the damage inflicted on lenders. A person familiar with the matter said, "London risks becoming a childless city as young families flock away from the expensive capital, prompting some schools to shut and fertility rates to crash," according to the London Assembly. The city's child population is collapsing faster than anywhere in Britain, a report by the group said. In the decade through 2023, the number of residents under 10 years of age fell by 99 to 100 as families moved out and fertility rates crashed, even while the capital's overall population increased by 506,000. The city's fertility rate has fallen below 1.2 births per woman. That compares with an England and Wales average of 1.41, well below the 2.1 level needed, in economists' terms, for the population to maintain itself without immigration. More than 100 Labour Party members of Parliament have urged Prime Minister Keir Starmer's government to rethink changes to the UK's immigration system, underscoring the scale of opposition confronting him from within his own ranks. 1.1% projected UK growth this year, down from a previous estimate of 1.4% in November. Keir Starmer distanced Britain from US military action against Iran, stating the UK doesn't believe in regime change from the skies, while indicating the strikes lacked proper planning and a legal basis. UK has had a $22 billion boost with tax receipts higher thanks to boosted VAT and higher wage growth, plus fiscal drag bringing more people into higher rates. According to Bloomberg's Tom Rees, the revenue raisers combined with lower debt interest spending are helping drive the improvement in the public finances, a key gauge that reflects expectations for the future path of UK interest rates has risen to the highest this year, fueling fears over a fresh increase in mortgage costs. Two-year swap rates used by lenders to price their mortgage products rose to 3.60% on Thursday, the highest since October. The rate had been at its lowest since mid-2022 on February 27, the day before U.S.-Israeli strikes on Iran began. The UK has cut its government bond issuance for the 2026-27 fiscal year to its lowest level in 3 years. The Office for Budget Responsibility expects government borrowing for the 2025-26 fiscal year to be lower than previously anticipated, and the agency also lowered its economic growth outlook. That marks the end of the roundup for this week. I hope you enjoyed it. If you like content like this, please remember to support this channel by clicking the like button and subscribe. See you next week.